Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, as I mentioned in the newsletter, if we start taking out the highs that we made Friday, that was probably going to be bullish. You'll notice last night we were down almost 400 points in the Dow Jones, and now we've reversed and we're up about 200, I guess. You can see that we went down and stayed right near that 382 all morning, and then after the market opened, it took off and rallied very strongly. And actually on the little pullback that you made right here, it was probably a perfect 382 right after the opening, and there it was right there, telling us we're probably going to be going up to, well, we've already made the 1.27 up here at 429. We could be going up here at 430.59 without any trouble. Now, the Russell has been lagging badly, but it's catching up a little bit here, and I recommended, of course, to sell the weakest. And that was where we sold this at 04. Let's just get this up and see. There's where we were last night. You see the market broke down. Then it made the ABCD to the downside. And we were suggesting to sell this retracement back here, ABCD at 2104 with a stop right above here. So it hasn't made new highs yet, but it's just a heartbeat behind. And since it's so strong with half a day to go, well, at least 1, 2, 3 hours could easily take that out without too much trouble at all. Now, I was hoping we had Norm Winsky as our guest today, but then I noticed on my calendar he's not due until the 22nd, so we'll have to wait and see how this starts to unfold here this morning. All right, now the wheat is still acting quite nicely. We're up about 15 cents in the wheat. And folks, the corn market is very, very close to what I think is a major bottom in here. Now, hopefully we'll get these correct. This is the price that we're looking at here in December corn. Let's just get up here. So there's what we're looking at today. You know, this is the action today. We're still near the lows that we made here on Friday. But the key to remember, if we look at this on the daily chart, this is where we want to be buying it, is down here at this level of around 4, is down 7 cents, well, 8 cents, 10 cents from where we are right now, is to buy the corn right around 428, 429 in December corn. That's new crop corn. That's an ABCD pattern coming in, as you can see. And we'll just draw this so you can see it really clearly. That's very similar to the one we had in wheat, and wheat's moved, 20 cents in our favor. So I think this is going to be right behind it, as are soybeans, November soybeans and December meal. We're watching those also for potential buys. So that's what we're watching here this morning to see if it's going to hold up or not. Now, one of the reasons for the strength in the Dow Jones, folks, is this right here. Remember, the wicked stepsister here had been United Healthcare. There was the low on Thursday. Now, today, it gapped higher. Well, this is the 16th, okay? And then today, this is today's action right here. Sorry about that. There's where we were on Friday. You see, it made a 382 retracement, and now we're having a move up. This tells us we could go a lot higher, and there's where we are with United Healthcare. But folks, this is a dead duck. I wouldn't trade this on the long side except for a scalp, but if you look at that, that's really, maybe get up to 310 or something like this, but this stock has been decimated and it's got major problems, and all you're seeing now is a little bit of a bounce. This is not the correct price, of course. Now, the other one that we had, if you remember on Friday, we'd been talking about Goldman Sachs. I want to bring it up here to show you about the head and shoulder that we were looking at. And here it is right here. We'll put the daily up. And This is what we were watching. There is the pattern that we were watching here. Now I have to update the prices here, you'll see. But there was a perfect number right here. We were selling at 616 with our stop at just a little above there. We were risking $7. Now the high has been 620. Now I have to update this, so bear with me here. And you can see after that today, we've had a pretty big move to the downside, and it's starting to come down. So now you would have your stop at your break-even point, and then you're going to see if it's going to get above it. So you opened lower, rallied up, and then it started to back off a little bit. Okay, all I can tell you is, folks, we got a lot of volatility coming on both sides of the fence, so that's something that you want to really keep in mind. I've got to repeat some of these things here, folks, because some folks didn't get to listen to me on Steve Rhodes, and I need to repeat it. But here is the gold market. We're going to get this up on the hourly to can see that we banged up against the 382 again here last night. We've been there 1, 2, 3 times, right up there at that 32.55 level. We're now trading at 32.31. Very quiet, but you see the pullback last night was only 382. So it's trying to make a bottom in here. And as long as we can stay above 3,200, I think it's got a chance to get up here. But if we get up to here, folks, this is a really, really serious place to be a seller. That's my 2 cents worth. So let's keep an eye on that. That's a very, very interesting one. I've spent a lot of time with on the other program for Steve. And by the way, I'll be doing his show all week long, so I'll be on at 11 o'clock and 1 o'clock all week, and then keep setting in the best I can for some of the other folks. Now, we made new highs. I think we made new highs in the NASDAQ. Let's just nope, not yet, but it's close. It's not oh, wait a minute. I think we did. Yes, we did make new highs in the NASDAQ. Okay, that's made new highs in the S&P. Haven't made it into Russell yet, but the others are not too far behind. And that's telling me that I'm probably wrong. Now, we sold this at the 04 level, okay? Now, our stop is right above there, okay, risking 10 points. But the reason why I sold it, folks, was because of what we were looking at with some of these indicators, which Jeff Hughes will be on later to talk to us about it. But look at the leverage, folks. During the last 4-week period, they put in $5 billion into the stock market, new buying. And look at this. This is levels that we haven't seen for 10 years. Okay, but the most important one is the put-call ratio. Look at this. This thing, no one wants to buy any puts here, much like they were back in March of 2009. Hello, operator. Man, this is telling you that this thing is skewed. Now, it's still going up, just like DID went up. But, folks, we've got negative E-mini stuff, folks. The E-mini's been rallying, but these days right here, these 2 days, these up days right here, we had negative open interest. In other words, open interest dropped on both of those up days. And you see we're almost to this high right here. I think we just hit 60.90 or something. So I don't know. I can't be bullish up in here, but it's pretty tough to be bearish. The only thing I did right was to sell the weaker. So that's the main thing. And look at the fear and greed index, folks. We're almost at the same level we were at the highs way back in October before we had the big break. And we're back here. So there's a lot of complacency. And it's certainly a very, very bullish factor for those that are still long, but it's not going up much. And with open interest decreasing, if you remember, we saw that in the gold market. That was a sign that there was going to be something pretty dramatic happening. So let's take a little break here, and we'll be right back. 877-927-6648.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, I want to bring up the S&P cash market right here. There's where we are now. I'm sure that this is behind because we've made a sharply higher high here in the futures, but I don't know if we've done this or not. But this is delayed, so I'm just going to try to refresh this and see if it gets. Yes, we did make a new high. That's what I wanted to see. That was very important. Those were the factors that I was watching to see if we could make a new high from this. And you know, we started we were down 400 in the Dow Jones, folks. And that was right at the 382, and then we started a rally, and then what does it do? It takes minus 400 to plus 200. So we should be over a major high in here today, but you know, like I said, you know, if it closes above here, it's probably going to go a whole lot higher. Okay, so that's what we're watching here. Okay, now I'll get this out of the way here. I want to see how much it looks like, because if you see this on the daily, folks, oh, shucks. Just a second. This thing is so frustrating. I just tell you. God darn. It still doesn't do it. Well, this has done this almost everything today, folks. I've got a data problem here that's not working correctly, so I can't show it. But what I can do is go up and show it to you on the charts that I was looking at over the weekend, because this told me that we were very, very close. There's the number right here. 1.27 of that move right here is 593. Now, we just made 594 just a second ago, so we did make a little bit higher high. Now, you don't get to see any pullback here because it's not open at that time, but we're back up at this level right here. In the Dow Jones, you can see here that we just shattered that puppy, folks. We got up here to 429. We were looking at 424 and a half, but we have that gap in here. You know, I've got to do that because I didn't put that in. Let's just do that right now where we're watching here. Where is the Dow Jones? I know it's right here somewhere. I was just looking at it. You know what I've got to do is I've got to cascade these so that I can see it quickly, and then I'll get it up real quick. There it is right here. And what we want to do is to go to the daily chart, just like we were looking at. And all I did on these to make sure, because when you have the ABCD pattern here and you have a gap, you had a gap here. So you got to extend this. So we need to change this. Look at this, how many times we were here all last week, and then boom, today we're very strong. But let's change this to 1.27 and see how close we come to the high of the day today. So that's 127 of the CD leg. Put that in there. That tells we could go a whole lot higher up in here, folks. So we're already breaking above it. There's your first sign you could be wrong. We're in the Russell, so I have to continue using the Russell. I can't change the prices, like I did in cattle and stuff like that. So that's really what you have to do. You got to put the orders in and let it go to see, if you get it. So we sold the Russell at 21.05, and our stop is at 21.15. That means it's got to make a substantial high. The reason why, folks, is the Russell was so much weaker. Now, just look at this on the daily. Hold on one second. Let's get this up here so you'll be able to see how weak this really is. Look at this. There's the big gap up for the things in Switzerland that happened, the transformation of negative tariffs to positive tariffs or whatever it was. We've been here let's just blow it up so you can see it, folks. 1, 2, 3, 4, 5, 6, 7 days, 8 days right here. Okay, nothing going on right here. The low today was 2081, 78% off of that, and now it's rallied 20 points. So that's why your stop has got to be right above that level right there, which is 21.15. So that's what we're paying very, very close attention. Getting back to the cattle, we had a pretty big break, as you know, and then today we went almost to the 61% retracement here today, misses it by just a few ticks. Now let's check and see if the June cattle that had been the strongest had made the 382. You could trade either one, but we're basically the lead option now is the August cattle, and here's the November. That's the June. We'll bring it up and see if it made a 3.8. It missed it by a heartbeat too. I can see that just now. See, we took out the previous day's high by 1 tick and didn't make the 382 up here at 23.36, and now we're starting to pull back again. So should be strong resistance up in this area, folks, looking at the cattle as we are right now. Now, I've had a question from our good friend Mr. AT over there in Houston about Tesla, and I had talked about it on Steve Rhodes' show. The problem was my data was a little behind, like it always is in stocks. So we're going to bring this up, put the hourly up here on Tesla, because it had a lot of resistance up here. Wow, it's showing at 249. Let's just get it up here. Right now, this is over the last several hours, and let's see. Someone said it was trading at 238. That doesn't make sense. But let me refresh this and see if that'll help. Yeah, see, there it is. It opened down. It was down on the day. There's your low, or high on Friday. Now you've had this little bit of a bounce. He was saying it traded at 238, so that's it. That completed this larger ABCD pattern right up here, folks. So remember, when we looked at this on the daily, it said it's going to have a lot of trouble up here at 251, and that so far has been the case. And I still think it's going to have some problems up in that level. So we'll get rid of that, and we'll get rid of the June cattle, because we don't need to see that anymore, and get more information going on some of these things. This is the August. If you get August up in here, get ready to sell it, folks. This is a major, major high in cattle. It's going to last a long time, folks. Let me show you why. There's your equal days up, 43 calendar days, 43 calendar days. This was actually 44. There's the big reversal on the biggest volume ever in the market. And boy, they went from long to short big time. So if you get a 382 here, get ready to sell the August cattle, because that's up around 208.5, 209. So I think that would be a nice 3-day rally like that would really be super, super bearish, because this is a major, major move here in some of these things. Just like the stock market, folks. Believe it or not, on Thursday and Friday of last week, let's just tell you about this, because I remember I used to bang the door about how negative the gold was with the open interest dropping, and it kept going up and up and up, and then it started going down and down and down. That's exactly what we've done with the S&P. Let me get this out of the way here so you'll be able to see it. Did we make another new high just now? Pretty close. But as we've done this, we get this up here on the daily. You can see here, let's see where we are. Yeah, we made a new high. We've been here. There was the big gap, okay? Now, we measured everything. It should have gone to 59.78 or something like that. Here's where we are right now. These 2 days right here, those 2 days, even though it was up strong and up, open interest dropped on both of those days on lower volume. And now here we are making a new high. If you got open interest dropping again, yeah, it looks like it's strong, but you got players leaving the market, and that's not bullish. That's what happened to us in the gold market. I kept alerting you to that. No, but you can be in these darn things, but you can wear yourself out trying to find out where the top is. That's why when you put your order in, you got to be able to say, okay, well, this is where I got to put my stop, and you risk a dollar amount, and then you move from that level right now, because you can see we just made a new high up here at 58.92, and that means we're not very far away from 5,900, which that's been resistance before, but we'll have to wait and see what happens with the next group here. Okay, stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I've been asked by several folks to go through the open interest that I look at. I go to the Chicago Mercantile Group email, just CME.com. It'll take you there. What you do is you click on markets, okay? And then what you do is you go down to see that you want to be looking at. Now, we're going to just show you what happened in the gold. Okay, there's gold. And what we're going to do, I forgot about gold. They've made this whole thing about gold. There's so much interest in it that they've got a total page on it, so I've got to change it. And all I do now, instead of hitting that gold, I go down to all products. Okay, and that'll give me the one that I want to see. I just have to move this down a little bit, and we'll go down till we see the gold market. And I also want to show you why we're looking at live cattle, because this is the total sum of all the buyers and sellers. It's a contract market. That's exactly what it is. And so you want to be watching that as you're looking at it. Okay, so we're going to come here, and the first one, there's the gold options, and pretty soon we'll be to the gold, and we're going to do live cattle too. But first of all, I want to show you why the gold was acting. Okay, there's gold futures. Okay, now I'm going to bring that up. Okay, then all I'm going to do now is I'm going to go down here to volume and open interest. So the volume and open interest is in there. And now as I bring this up, it's going to show you the open interest. Now you can see way back here, back here in March, we were trading about 480,000 contracts. You can see now we're down now to just about 380. Now, if you'll see the last, these are the last couple of days, because it'll go through and show you where you were on Friday. You see there was a slight uptick, but if you go back to see what it was doing on Thursday, that'll tell you what the open interest was doing that day, open interest dropping. But in the cattle market, and we'll just get back here, to go one more to get back to where we were, to show you these things, because I think this is where you really understand that the buying and selling that comes in on these things is not, it's not telling you that there's not new buying coming in. And that's why you want to be watching it, okay? Just I want to get to live cattle, and this dramatic change, folks. There's the options. I want to get to the futures. Just go to cattle futures here. I'm not going to spend a lot of time, because if it doesn't, there it is right here. There's your cattle futures. And you come up like this, and all you do is you check open interest, just like this, open interest. All right. Now I want to show you something. When that market went exploding to the upside, okay, you see the open interest dropping here these last few days. So if you look at this, on this days right here, there's your Friday. Go back to those big days. Go back to last Thursday, okay? Look at this. Dropped 1,900. Go back to Wednesday, the really big day. Dropped 8,000. I mean, that's 8,000 on the downside. That means that's bearish because you got prices dropping and open interest increasing. That tells you the new shorts are coming in the market, and that's what's happening, okay? So I hope that helps. It's not impeccably accurate all the time, but it gives you a heads up when you're looking at all the prices and stuff happening. It gives you a pretty good idea. Now, that's all I do, is to try to add them together to see that that's where we are on some of these things, and that's the bottom line of what I'm looking at as I watch these things unfold. I've talked to the folks on Steve Rhodes' show about we've been doing it from 11 o'clock to 12 o'clock. I'm going to be on all week for Steve, and then I'll be on my own show from 1 to 2. So you can get me 2 hours if you want to. I'm not going to try to, repeat everything, but these are important things. Now, this is November soybeans. Folks, I'm really bullish November soybeans. Now, here's where we are right now. Let's double check and see and make sure the prices are coming in okay here intraday and see where we are. Well, that didn't work, so let's try it again. Okay, now that's okay, because that's where we are. We want to get this up here, get the daily. We're trading right there at 36. Now, this is the number I want to be watching. Now, we're into May now, folks. Beans have been planted, corns have been planted. It's been 5 years since we've had a major crop scare. And a crop scare means beans go, $3 to $5 a bushel, somewhere between $15,000 and $25,000. And when these things go, they really go. Now look at where soybean. Look what this is on a long-term picture. I mean, look at this. They used to be at $13, now they're at $10. Wheat used to be at $13, now it's at $6 or $5. It used to be at $5, now it's $5.62 or something. So this is why I think we're going to go higher. Now, if fortune prevails, here's what I'm looking at right here. If we close above this line right here, which is 1070, that's 36 cents from where we are right now. That is flat out bullish, folks. So keep in mind, you can have some pretty good rallies. You can see here during the growing season, look what happened last May. See how it topped in May? This year, we're making a bottom in May. So that's why it looks very, very interesting from the long side right here. So I'm going to be looking to possibly buy it here at around 10.29, down 7 cents, taking out these lows, risking about a dime is what I'm probably going to do. 10 cents to be a farmer. And I'm not going to do it in the middle of the day. I want to do it either right at the opening, and that's what I'd like to see it do it. But I'd love to see an ABCD in here, but there's really not anything there that, at least I checked it earlier. I don't think there is. Well, there's something right now, because there's the high we made. Here's Friday's high right here. You can see all we did on that was come right back up to just didn't even make a 382, so it's still acting, relatively bearish, and we're doing nothing today. This, hasn't done anything. Looks like we're heading down to this number that I really want to be looking at, just right below this level right here. So I want to wait and see how it gets there. So, but that 430, that's a dime, 10 cents from where, 5 cents from where we are right now. Nickel, which is $250. We should take this low out, and that's when I'm going to start looking at it. What I'll probably do is if it gets there, I'm going to buy it if it goes back above it. That's what I'll do. In other words, if we get down to this level right here, I'm going to buy it if we break above the 382 here, which would be around 1045. So I'll put that in here because that's probably what I'm going to do. The main reason is because of the seasonality of this. This in the growing now. It's planted. Farmers can't do anything about it. Too much water, bad. Not enough water, bad. And it can be perfect like it's going right now, but it doesn't do that all the time. But day after day, year after year, you're going to catch one of these, and that's what I'm looking for, is a potential change. We've got wheat near the low, we got corn near the low, oil near the low. Soybean oil is a little higher, of course, but we've got meal and corn and beans all very, very low. I don't know what oats are doing. I don't trade those, but it looks like all these things are getting ready to make some type of a pretty significant bottom based on what I'm watching here on some of these things here today. Okay, so those are the main ones that I'm watching here. We'll get on here to the next one. How high do we get here in the Dow Jones? I see we've made new highs. Let's look at it intraday here, because it's not well, it is. There's your big run up. There was your pullback here right at the 382. So we'll be right back. You can't
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, to take a look at that crude oil, I recommended, taking the profits here. So you can see once it broke this level, it told you we were going down for the rest of the day. You could have reshorted it there if you wanted to. I was busy doing this, so I didn't watch it, because once it did that, it tells you that you are heading down lower for the rest of the day. All right, let's just get these out of the way and cover some of these things here, what we're watching right now. Just show you, give you a heads up on the wheat, folks. I'll get this up here on the daily because that's working in our favor. We bought that down there at 48, and now we're trading up around 63. It's got a $750 profit in it. Got your stop now at break even, and we want to add some corn if we can get that done here the next day or two. I'm doing live trading on Friday, and I'm going to be doing something different, folks. With this volatility that we're having here, people have asked me, what do you do when you have these really strong trending markets? And that's one of the things that I want to try to do as we come into this Friday session, because I like showing the people some of the things I've learned. Some of it doesn't work. Nothing works all the time. But here is one of my favorite things that I used to use. Back in the days of the Russian grain robbery, you see the market goes up, and you see it does this little consolidation and breaks out of these levels. These are dynamite triangles, folks. When they break above those dynamite triangles, that's a really big deal. And it's the same thing on the downside. However, markets go down faster than they go up, so you have to line everything up. I'm going to be showing the folks how to do that during these sessions, because when we got a really strong trending day, that's what you're looking at. So let's play the devil's advocate here, because I was thinking about that when I was watching how bullish the Dow Jones was today, because it stopped exactly, where is it? Here it is, right here. This morning, let's just get the hourly chart so you can see it. I covered this in the video last night. Okay, there was the low on Friday. Okay, now all it did, you see, it just pulled back. Couldn't even make a 50% retracement here, and look what's happened. We made new highs on the day, and new highs from back on the 13th. So it looks great, doesn't it? And that's exactly what happened. It kept doing that, and then in the morning, we already covered this. I'll do it again. Look at that. There it is right there. There's your early morning low. There's the opening, okay? There's a big run up in the opening. Then look at this. The market takes an hour to pull back to the 382. It drops from 20, it drops 300 points, 300 Dow points, and then goes from 300 Dow points Look at this big move. So that's what we're going to be looking at on some of these things, because on downtrending markets, we haven't seen many, but when we do see one, that's what we want to be watching as we're watching these things unfold. Okay. All right. Now I've covered the gold market. I wanted to cover silver because I think silver, folks, I've been trading silver in a long, long time. That was my first big move, was back in 65, 66, when they changed over from paper silver to real silver. Let's get it up here to take a look at it, because I think if silver can ever get, let's just get this up here on the long-term daily here. We'll do the daily first. There's where we are. You can see silver has not backed off at all when gold is down. See, gold is down in the last few days here. Gold has dropped over $300. Look at silver. It's done nothing. It's acting really bullish. There it is. Let's just clean this out and I'll just show you. Look at that. There's an ABCD right here. Let's see if that was a 382 here this morning. There's your AB. There's your CD. And there it is. 0.32. So it didn't even make a 382. But look at this on the weekly, folks. Look where we are right now. We're right here. Folks, if we close above here, we're going to take this out, and that's $50. And that means you're probably going to see $100 silver. If we can get above $36, you don't want to be short silver if it gets above 36. That's $3.50 from where we are right now. I'm going to be watching it if we get above 34. That tells me we're breaking above the 78% of this. I'm going to start getting along. It's acting pretty good. Look at that big move. It dropped, folks. Dropped nice. $8. $40,000 a contract. And where did it stop? Right at the 382. Right there. There's your 382. It was right here. Went a tiny bit below it by a heartbeat. And you see it didn't stay there for a millisecond. We went from 27 to 28.80. Well, you saw $4 an ounce without even batting an eye. Now it's starting to act pretty good. Maybe that's a prelude that maybe gold's going to go higher. Got to do them separately, but gold looks bearish right now, but silver doesn't quite look that bearish. So that's why I'm paying close attention to that one. Okay, we've already talked about the gold market. Let's switch over to the currencies, because we had a nice move here in the euro here this last couple of days. Let's get that hourly chart up, because you'll see that we had that big ABCD down there. There it is right there. Stopped right there on Friday. Then we had the big run up here. There's the start this morning. Once it took out this VTL with this valid trend line. See, once it took that out this morning, right after the open, look what it did. It went all the way up here. So what are we doing now? This should be about a 382 pullback right now as we speak, because there's your low, there's your high, and there it is right there on the silver euro, stopping right where it should. So it's got to hold this level, then we got a chance to get a lot higher, maybe another point higher in the euro. So I hope that helps. Now let's switch over to the British pound for a second, because we followed both of those quite well, and we've also do the dollar index. I want to get this up here on the hourly basis here. This had been the stronger of the two, and it still is. As you can see here, the same thing here in this move right here. There was your, let's clean this out here so we can see it real clearly. There was your 382 retracement here on this one. I believe you're right there. No, it went to the 50%, and then we had the move here. No retracement here at all. There's a little tiny 382 right in here, but boy, that's really small. And now it looks like we're going to be going up and making a ABCD up here, possibly up at this level right here. But the problem with this one is, if you look at this daily, okay, we're way up here. This is where we are right now, folks. So if this thing gets above this level here, that's not going to be very bearish, okay? The reason why is, you see this little pullback here on the daily here just a few days ago, right there. That's why it stopped at that beautiful ABCD, right on the money, folks. There was your ABCD right here, just last week's low, and now we're starting to move higher still. We start getting below here, everything changes, but right now we could be starting to assault this. And remember, on the long-term weekly, if this thing gets above this, oh boy, you could really be looking at something much higher up in here. I don't think it will do that. I think this is going to be it, because we've hit it 1, 2, 3, 4, 5 times on a weekly basis. this 134 and change. We're 133 right now, so getting above that, if we close above that 135 level, that's 150 pips from where we are now. This is a bullish. This will be a bullish pattern, and you don't want to stand in front of it. See, that's your 382 off of this one. There's your 382 off of this one. It says we could go higher, and that's the way it's acting right now. So that's what I'd be watching. Let's see how the clock on the wall is saying today. We'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the Russell. Now, we sold this at 21.04, and I put a stop at 21.14. Now, we're almost break even right now, but it's weaker than the rest. The others have taken these highs out. So if this doesn't do this, I would say keep your stop working right there. Because that's the only negative divergence that we have right now. But that's the way I would be handling it. And so like I did in the cattle, of course I did that one wrong, but that's neither here nor there. Okay, that's pretty much it. for the day here. I got a couple things to work with Apple. Just 1 second, because Apple has had a big move here from this morning, from what I understand. Someone's asked me to take a look at it, and it's not doing anything at all. It's really just very, very quiet. You had this big gap up here, and there's where we are. We're basically, looks like we're down on the day just a little bit in Apple. Yeah, we are. Not very much. Looking at this on the long-term daily, it did pretty much what it was supposed to do. It got up to this level right here, which is nothing more than the 50% retracement of this big move right back there, and we hit it several times. And so that's what I'd be paying attention to right now. We got to get above that. Then it's got a chance to do that. I've already covered Tesla. Ooh, did I cover? Yeah, I did. I already covered Tesla. So that's the main thing that I would be paying attention to here this morning as we look like this. Tomorrow, remember, we have the live trading on Friday. I'm going to be doing a lot of teaching because some of these intraday things that I see, you can use some of the things that I've used off and on over the years in strong trending markets, 2 retracements, but mainly looking at valid trend lines and how they work. That was one of Jim Twentyman's favorite thing. A valid trend line is a trend line that has several spots on it that line up. Like, do you have a 786, 50? That's a trend. That's a valid trend line, would be right there. You see, and then we break above that. That's a bullish sign. We'll see you on the flip side tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.
Steve Rhodes